From dreams to structure, building your tax-efficient business in UAE. Most people don't set up a business in Dubai. They buy the cheapest license they can find and they mistake that for strategy. You did not choose a business structure in Dubai, you chose price. And I know exactly how it happened because I see it every single week. You went on Google, you typed Dubai business setup, you found the cheapest option, free zone, 3-day setup, zero tax, done, sorted. And that license sitting in your inbox, it looks real. It's got a stamp, it's got a number, it's got your name on it. But here is what nobody tells you at the start. Wait, if you're paying more tax than you legally have to, that's not a compliance problem, that is an information problem. I am hosting a free live webinar where I break down exactly how the Dubai tax strategy works, who it actually works for, and the mistakes I see people make constantly. The link is in the description, so go grab your spot before it fills up. Let's get back to the video now. The wrong structure does not fail immediately. It fails slowly. It fails in the bank meeting when they say no. It fails when you want to sell to a client sitting right here in Dubai and you legally can't. It fails when you try to hire someone and your visa quota does not allow it. It fails when you try to scale and the whole thing cracks. And by the time you realize it, you've already built 12 months of your life on a foundation that does not fit what you're actually trying to achieve. Today, we are breaking down chapter 5 of my book, Dubai Dreams Tax-Free Schemes. And this chapter is called Dreams to Structure. And in the next 15 minutes, I'm going to walk you through 4 things. 1, the free zone setup, what it gets right, and the one line it cannot cross. 2, the mainland company, more paperwork, but a much bigger playground. 3, offshore entity, the asset protection play that most people completely misunderstand. 4, the holding company, the move that turns a business into an empire. If you stay until the end, you're going to know more about the UAE business structures than people who are already been operating here for years. And you're going to know exactly which one is built for you. Quick note, before we go deeper, I'm not your lawyer and this is not legal or tax advice. This is education. Rules change, your nationality, your business type, your specific situation, they all matter. Use this video to understand the big picture, then get proper personalized advice before you make any moves. Now, why does this chapter matter so much? Because in chapter 4, we talked about the domino chain. Company, visa, bank account, lease. Each step unlocks the next. But here's what we didn't fully answer. Before any of those dominoes fall, you have to decide what the first one is made of. Get the first domino right, everything else flows. Get it wrong, the whole chain either stops or builds in the wrong direction. And let me give you a number that puts this into perspective. In 2025 alone, the UAE registered over 250,000 new companies. The country now has over 1.4 million active business licenses, and the Global Entrepreneurship Monitor ranked the UAE the number 1 in the world for the 4th year in a row as the best place to start a business. So people are coming. The question is, are they building on the right foundation? In the UAE, there are 4 main business structures, 4 different parts. Each one was designed for completely different kind of entrepreneur. And in the next 15 minutes, I'm going to walk you through all 4 through real stories, real consequences, and real outcomes. So let's get into it. The free zone trap nobody wants you about. Everyone is selling you a free zone license. Zero tax, full ownership, 3 days, done. And for a lot of businesses, that is potentially true. But here's what they don't mention. The moment your clients are inside the UAE, you cannot serve them directly from a free zone depending on what is your business activity. You need a distributor, a middleman, or you're operating outside your lane. And that's a compliance problem waiting to happen. But wait, there has been a massive change as of March 2025. Dubai passed a brand new resolution that lets free zone companies operate on the mainland for the first time ever. A simple branch license, 10,000 dirhams a year, no separate company needed. The wall between free zone and mainland just got a door. Free zones are powerful, but only if they fit your business model. And I'll show you how to know which side you are on. Most people come to Dubai wanting freedom. The free zone gives it to them. The question nobody asks is, freedom to do what exactly? Sean ran a digital marketing agency, clients in New York, London, Singapore, all remote, and he didn't need a shop, a showroom, or a walk-in customer. He needed fast Wi-Fi, 100% ownership, and a tax structure that did not punish him for growing. He registered in Dubai Internet City, 5 days, done. Trade license, company address, full ownership, and no local partner required. And on his qualifying income, 0% corporation tax. The UAE federal corporate tax applies 0% up to 375,000 and above that 9%. For John, Free Zone was the perfect match. His business was global. His clients were overseas. He did not need access to the local market. So he needed a clean, fast, tax-efficient base. That's exactly what a Free Zone is built for. And what makes Free Zones so powerful? Free Zones in the UAE aren't a loophole. They're government policy built specifically to attract foreign businesses in tech, media, finance, logistics. There are dozens of them, each one tuned to a different industry. 100% foreign ownership, full profit repatriation, streamlined setup, and for qualifying income, substantial tax savings. That's the offer. And the numbers are staggering. DMCC alone, that's the Dubai Multi-Commodity Center, now has over 26,000 companies from more than 180 countries. They've added 1,100 new companies in just the first half of 2025. And that's how fast this ecosystem is growing. The one thing nobody mentions, but here's the part that catches people off guard. Free zones have a lane, and that lane has a hard edge. If your clients are based on the UAE mainland, and if you want to walk into an office in Dubai and close a deal directly, traditionally, you could not do that from a free zone company without a local distributor or a separate mainland branch. And that extra layer costs money and slowed everything down. Now, here is where it gets really interesting. And this is something that literally just changed. In March 2025, the Dubai Executive Council passed a resolution number 11, and this is a game changer. For the first time, free zone companies in Dubai can now get a branch license to operate in the mainland, 10,000 dirhams a year, no separate company, no entity. You can even operate from your free zone office. No mainland office required. But this is the critical part, that mainland revenue is still taxed at 9% and you need separate financial records. So the 0% rate only applies to your qualifying free zone income. The rules haven't gone away. They've just become more flexible. Your visa quota is also tied to your office. Want to bring 3 new team members? Your space needs to qualify. Want banking? Some UAE banks are still cautious about free zone entities without a solid track record. So digital banks like Vayo are changing that fast, with account openings now taking as less as 2 days. None of this makes the free zone a bad choice. For thousands of businesses, it is absolutely the right one. But it has to fit your model, not the other way around. If the free zone gives you freedom, the mainland gives you access. And in Dubai, access is everything. Let me tell you about Sarah. Sarah is an interior designer, but not the kind who does weekend renovations. She came to Dubai to win government contracts with 5-star hotel groups and put her name on lobbies that people fly across the world to see. There was only one structure that could give her that. She went mainland. A mainland company is registered with the Department of Economic Development, the DED, and what that gives you is the entire UAE market. No middlemen, no distribution agreements, direct access to every government office, every developer, every corporate client in every emirate. Within a year, Sarah had a showroom in Jumeirah, project with a 5-star property group in DIFC, and pitches out to Abu Dhabi. None of that was possible from behind a free zone wall. And the law changes that most people missed. Here's something that changed everything for mainland companies, and a lot of people still haven't heard about it. Before 2021, if you wanted a mainland company, you had to give 51% of it to a UAE national. You were the minority shareholder in your own business. And that law is gone. Foreign investors can now own 100% of most mainland companies. Full ownership, full market access, the combination didn't exist before. And there is more. In October 2025, the UAE passed a major update to the commercial companies law. Mainland LLCs can now issue multiple share classes, different voting rights, different dividend rights. That used to be something only in DIFC and ADGM companies could do. Now it's available on the mainland, and if you're bringing in investors or co-founders, this is huge. Let's talk about the trade-off and the advantages. I'll be straight with you. Mainland is more work, more paperwork, more setup costs, more compliance, and once you pass the income threshold, you're paying 9% corporation tax. Salaries must go through UAE banks via the wages protection system every month, on time, no exception. But here's the flip side that Sarah figured out. The same compliance is what makes banks trust you. Clean payroll records, proper DED licensing. Banks see a business they can verify. That translated into faster loan approvals and access to credit that funded her showroom build out. And let me tell you something about speed now. Dubai launched their upgraded Invest in Dubai platform at Chitex 2025. And business bank accounts openings in Dubai have dropped from an average of 65 days to 5 days for qualifying businesses. 5 days. That's not a typo. The mainland asks you for more, but it also opens up doors that a free zone simply can't. So the mainland is not the heavy, slow option anymore. It's becoming the smart one. Before we go further, I want to ask you something, and I actually want you to answer this in the comments. Where are your clients? Inside the UAE, outside the UAE, or both? Let's move on to offshore companies. Not every business in Dubai is built for Dubai. Some are built for the whole world, and they need a structure that can hold it. Let me tell you about Marco from Italy. Marco doesn't want a shop or a team. He has property in Portugal, software assets in UK, stock positions in Singapore, and he's tired of watching governments in multiple countries chip away what he has built. What Marco needs is not a trading license. It's a legal fortress. And he found it at the RAC ICC, the Ras Al Khaimah International Corporate Center. He registered an offshore company, and from that one structure, his entire global assets picture became cleaner. What offshore actually means? A UAE offshore company is a non-resident entity. It cannot employ people locally or trade on the UAE mainland. What it can do is hold things: real estate, intellectual property, shares in other companies, financial assets. For Marco, that meant his Portuguese property, UK software, and Singapore positions all sat under one legal umbrella. Full foreign ownership, zero corporate tax on qualifying offshore income, and strong privacy. Your name does not appear on public registers. From an estate planning perspective, it also simplified everything. Instead of navigating succession rules of 3 different countries, he transfers shares of one company and done. But here is what offshore industry will not tell you upfront. The era of set it and forget it shell company is over. In 2019, the UAE introduced the economic substance regulations. The message: your company needs to be real. Genuine records, genuine purpose, genuine management, not just a name on a register. Since 2023 corporate tax changes, the standalone ESR filings were streamlined away. But the substance principle stayed. Your offshore company needs to do what it says it does. And here is something brand new. In May 2025, RAC ICC passed its biggest update on foundation regulations since 2019. They introduced firewall provisions that block foreign judgments conflicting with RAC ICC regulations. They added a 3-year statute of limitations on challenges to foundations asset transfer. So the protection actually got stronger, but only if you're doing it properly. Now, one thing to be very clear on: RAC ICC offshore entities cannot qualify as a qualifying free zone person. That means they don't get the 0% rate on qualifying income. And they generally can't get a tax residency certificate. They still need to register for corporate tax though. Banking is also more selective now. Most UAE banks want to see a track record or an established group behind an offshore entity before they open a relationship. Done properly, a UAE offshore is still one of the most powerful asset protection tools available to any global entrepreneur. Done carelessly, it's a fee and a certificate with no banking and no real protection. If someone is selling you a UAE offshore company and says zero tax, total privacy, no questions asked, they are describing 2012. The world caught up to the UAE in 2019. Substance regulations, global transparency standards, and the shell company play is dead. The UAE just exited the FATF grey list. They got removed from EU's high-risk AML list, and they are preparing for the 5th round of mutual evaluation starting June 2026. This country is playing at the highest level of global compliance now. But here is what most people don't know. Done properly, a UAE offshore is still one of the most powerful asset protection structures on the planet. The game changed, the price did not. Only if you do it right. What if you didn't have to choose between a free zone, a mainland, and an offshore company? What if one structure sat above all of them and made every piece work together? Let's talk about Aisha, the entrepreneur with everything everywhere. Aisha has an e-commerce business, a fintech investment in London, real estate in Dubai, and a manufacturing deal coming together in Vietnam. By every measure, she's doing well, but managing it all is a nightmare. Different tax rules, different inheritance laws, a tangle of entities that nobody, not even her accountant, has the full picture on. Then she found the one structure designed exactly for this problem. Aisha set up a holding company inside Abu Dhabi Global Market, the ADGM. And the moment that entity existed, her entire entire business life got simpler. Her holding company now owns the shares of all her businesses. Not Aisha personally, the company. One board, one layer of legal protection above everything she built. If one venture fails, her other assets aren't in the line of fire. The wall holds. And succession? Instead of navigating 3 different country rules, she transfers her shares of the holding company and everything moves with it. And then there's the tax position. Under the UAE's corporate tax law, the participation exemption, when Aisha's London fintech distributes dividends to a UAE holding company, those dividends land at 0% tax. And if she ever sells that fintech stake and books a capital gain, also 0%. Not a loophole, written into the law. The UAE designed this deliberately because they want to be the global hub for these structures. If Aisha had to build that same holding structure in Germany or France, the difference over a decade of successful investing could run into millions. Meanwhile, DIFC, the Dubai International Financial Center, just launched something incredible in 2026. It's called the Variable Capital Company. Think of it like a holding structure where shares are issued and redeemed based on net asset value. You can have segregated cells, each one ring fencing different assets. Distributions can come from capital, not just profits. This is the kind of thing that used to only exist in Singapore and Luxembourg. Now it's here. Thinking which holding setup is right for you? You can set up a Mainland LLC with a holding activity, which is simple, clean, and lower cost. Or you can use a premium free zone like ADGM or DIFC, which gives you English common law, treaty access, and tax residency certificate that opens doors internationally. Or offshore options like RAK ICC are most cost effective. Aisha chose ADGM. It requires an audit and a physical presence, a small office, a part-time directorship, more effort, but the credibility it buys her internationally is worth it. And the UAE now has 140 double tax treaties. That network keeps growing. One thing to be clear on, a holding company is not a trophy. It needs real records, real board meetings, real substance. The paper shell is dead, but with genuine, even minimal presence, a UAE holdco delivers asset protection and tax efficiency that very few places in the world can touch. Now, most people know there is no personal income tax in Dubai, but almost nobody knows about this. If you own a business in multiple countries like London, Singapore, Lisbon, anywhere, and you structure a UAE holding company correctly, you receive your dividends from all of them at 0% tax. Sell one of those businesses, the capital gains also at 0%. This is not a loophole, it's written into the law. The world's smartest investors are quietly restructuring into the UAE right now, and here is how exactly they are doing it. 250,000 new companies were registered in the UAE in 2025, and I bet at least half of them made the same mistake. They picked their structure based on price, not based on what they're actually building. Free zone for someone who needs mainland clients, wrong structure. Mainland for someone who only works remotely with overseas clients, overpaying. Offshore for someone who thinks it's a tax hack, no banking, no protection, it's just a fee. The cheapest option is almost never the best option. The right option is the one you never have to undo. Before you choose a structure, let me give you a simple filter. 3 questions. Are your clients outside the UAE? Start a free zone. Do you need to sell directly inside the UAE? You need a mainland. And now with the new 2025 resolution, you might even be able to start a free zone and add a mainland access later without a whole new company. Are you managing assets across multiple countries? Offshore or holding company is your conversation. And if you're building something institutional, something with investors and exit strategy, a long-term legacy, the structure you put in place today will either make that easier or make it much harder. Picture yourself 12 months from now. Your structure is right, your bank account is working, actually working. A payment comes in from a client overseas, lands clean, no drama. Your accountant closes the quarter without a single question about where the money went or how it was structured. You're not scrambling to fix something you set up wrong 18 months ago. You're building forward. That's what a proper structure feels like. Not just money saved, momentum. Everything in this episode, John's free zone, Sarah's mainland company, Marco's offshore, and Aisha's whole building company, it's all inside the chapter 5 of Dubai Dreams and Tax-Free Schemes. The book goes deeper with actual costs, the banking implications, the questions to ask your consultant before you sign anything. Link is in the description. Go get your copy. And if you want help building the right structure for your specific situation, my team at Alliance Street Consultancy does exactly that. Company registration, bank account opening, corporate tax structuring, the full chain. Done properly from day one. We don't sell you the cheapest license and disappear. We understand your business first and then we build around it. Book a consultation. The link is in the description. Now, we've covered 4 structures, the foundation every Dubai business is built on. When investors want in, when you want to list shares, when you need an institutional structure that can raise capital at scale, not just protect what you've already built, but fund what comes next. There is a structure for that. One most Dubai entrepreneurs will never hear about until they're big enough to need it and scrambling to understand it. It's called the joint stock company, and it is the structure that turns a business into an institution. That is chapter 6. Subscribe, hit the bell, because if chapter 5 is about laying the right foundation, chapter 6 is about building the skyscraper. You didn't come to Dubai just to survive. You came to Dubai to build something real. Let's keep building together and see you in the next episode.